Hello and welcome back. On today's Targets in Focus, we're looking ahead to the Antipodean currencies today and a possible rate cut next week by the Reserve Bank of Australia. Well, joining me on the line from Frankfurt is Antje Praefcke, a Senior FX Strategist at Commerzbank. Antje, thanks very much for joining me today. Now, it's been just a day since the ECB's historic rate decision low of 0.5%. So I'd just like to touch on this before we move on to the main topic of the Australian and New Zealand dollars. Can you give us the latest from your end on how you see the euro-yen performing over the coming weeks and months?
Well, actually, we had quite a surprise, not really a surprise, but a very important decision today from the ECB because let's just look a couple of weeks back. We had the impression that the ECB was less restrictive than other central banks because a lot of huge amounts of LTRO were paid back to the ECB. Seemingly, banks didn't have the necessity to have that much liquidity in their portfolios. That has changed because we have seen quite disappointing economic data over the last couple of weeks. So the ECB took the decision to get even more expansionary. Now we know that the Bank of Japan is already very expansionary on a track that hasn't been seen in this world already, and we know that it's going to double, more than double its balance sheet, the Bank of Japan. So in the very short term, we may see some corrective move and sideways trading in the euro-yen, because at the moment we know that the ECB again is becoming more expansionary as well. But if you have a look at the big picture, it's clear that the Bank of Japan is by large the more expansionary central bank. So I expect euro-yen for the moment to see a sideways trading move, but pressuring higher. At the moment we have good resistance in euro-yen around the 131 area, but overall I think this level will be broken over the next couple of weeks, and we're going to see euro-yen higher, meaning the yen weaker against the euro. And our target for the end of the year, for the end of this year, is 147 in euro-yen, so a clearly weaker yen against the euro.
Right, let's get back to the Antipodean currencies then, in particular the Australian dollar. Now, some analysts are expecting a cut of 2.75% next Tuesday. That would essentially be an all-time low. Are you expecting that sort of a cut?
It's a very hard decision to take, and finally we tend to say yes, the RBA will cut as well by 25 basis points, but it's a very close call. We know that the economy had good performance in Q4. It's clear that overall, with the world economy softening a little bit, Australia as well will have a little bit less good first quarter. We have consumer confidence being okay-ish, but not very strong. We have CPI rising slightly, but being at the lower end of the target band of the RBA. So, on the other hand, we have China posting less good data. We have a softened employment report in Australia. We had over the last couple of weeks a correction on commodity markets, and as well we have a fiscal policy which is likely to become more expansionary because we have elections in September in Australia. So the RBA has to take into account this argument as well if it wants to encounter more expansionary fiscal policy. So we have pros and cons, but I think in the end, the RBA, if it wants to cut, it has to cut now and not wait maybe until CPI, so inflation is rising again. And on the other hand, I think on the global scale, global leading indicators of the world economy have disappointed over the last couple of weeks, and so I think the RBA will take it from the cautious side and cut next week. But as I said before, it's a close call because there are a lot of arguments pro and con.
With all this in mind, could you briefly take us through your predictions then for the Australia against the US dollar?
Yes, I think overall, surely if the RBA cuts, I think some of it is priced in, but a rate cut is always negative for the currency. So I think we can try to test the downside around 102 in Aussie against US dollar again. However, overall, I think in a market which is focused on fiscal performance, which is focused on ratings, you shouldn't forget that the Australian economy is a AAA economy, has compared to other industrialized nations quite high rates, and so it's rather a safe haven and has a lot of fundamental points on its side. So I expect in the very short term, in case of a cut, the Aussie to get under pressure, and so we may touch the 102 area in Aussie again. But in the medium to long term, around mid-year, I think the Aussie should gain back ground because it's going to be focused on its fundamental argument. So by September, I expect it to rise it to 106, 104 again. Towards the end of the year, it's another story because in case the Fed starts to signal that it might reduce QE3, and we saw on Wednesday, and we saw specifically today on Friday with the non-farm payroll report that apparently the unemployment rate is falling in the U.S. So there is a risk that quite earlier than many now expect, the Fed may announce that it could reduce QE3. So in that case, I expect the U.S. dollar to gain ground against the Australian dollar. So at the end of the year, I see Australian dollar against US dollar at 101, meaning a little bit higher US dollar. But overall, I expect the Aussie to remain above parity around for the rest of the year.
Now, we know the Australian dollar and the New Zealand dollar are both heavily affected by commodities and how much they export to China. But economic fundamentals, you could argue, support the Kiwi at the moment. What can you tell me about the performance of the New Zealand dollar, and how will it fare against the US dollar over the short, medium and long term?
I still like the New Zealand dollar as well, a little bit even better than the Australian dollar, and it has shown specifically since mid-March, a good performance against the Australian dollar. What you have to keep in mind is with New Zealand, Australia is more, I would say, hard commodity exporter, iron ore and coal, whereas New Zealand exports, for the most part of its exports, dairy products, so food products basically. So the food prices are more important for New Zealand, and they have been quite high over the last couple of weeks. That supports the Kiwi dollar. Overall, the Reserve Bank of New Zealand does not think about a rate cut. It will keep its rate on hold. It had a strong fourth quarter. It has increasing investment in the building sector. Remember that they had strong earthquakes a couple of years ago, and they expect building to continue to be a good contributor to growth. And the RBNZ is concerned about rising house prices, and we see quite dynamic rising house prices in New Zealand. So this means that there is no cut in sight in New Zealand. The current drought will affect the economy, but on the other hand, it will increase food prices as well. And the strong New Zealand dollar weighs as well a little bit on the economy and on exports, but the last trade balance was really good, and the strong Kiwi dollar did not reflect in the trade balance. So overall, due to these fundamental arguments, I like the New Zealand dollar, and I expect it to remain on quite high levels against the US dollar. I expect it to remain around the 0.84 to 85 area in a 1 to 2 month perspective. But the same is true for the New Zealand dollar than for the Australian dollar. In case towards the end of the year the Fed signals that it's going to be less expansionary, then the US dollar should gain some ground against the Kiwi dollar. So I expect Kiwi dollar at 0.8% at the end of the year. But overall, I expect the Kiwi to show a good performance and to remain above the 0.8 level throughout the year.
Okay, that's all for now and from me on the last day of this trading week. If there's sunshine where you are, enjoy it this weekend, but I'll see you back on Monday with the press review. Until then, goodbye.